Out of work for months with no money coming in, Arizonans are facing tough challenges of buying essentials like groceries or making rent or mortgage payments. Protections were put into place, but as we've seen, people have still been forced from their homes during this pandemic. All new tonight, in part with the Rebound Arizona and helping you stretch your dollar. Let Joe Knows, Joe Ducey takes a look at what options you have to avoid losing your home.
In April, Arizona Governor Doug Ducey said in the face of the coronavirus, banks and other lenders were expected to work with borrowers. No one was to be locked out and kicked to the curb if they couldn't pay due to a loss of income. But what options do you really have if you own a home and don't want to lose it? Holden Lewis, a housing expert with NerdWallet, says no one will call offering help. It's on you.
Call the mortgage servicer. You ask for forbearance. They'll ask you a couple of questions, nothing too detailed, and then you'll work out a plan.
That plan can mean the ability to skip payments or make partial payments for up to 6 months on average. Sounds great, no payments for half a year, but don't take a forbearance unless you really have no other choice. It's a temporary solution that could cost you more in the long run. When that time period's over, you still have to pay that accumulated principal, interest, and more.
The mortgage company is really going to want you to catch up on the taxes and insurance that you fell behind on first.
Holden says your lender may ask you to pay more each month on top of your normal payment, tack on extra payments at the end of your loan term, or try to ask for you to pay it all at once.
You can show your financial picture, show the bank statements and your paycheck stubs and demonstrate, hey, you don't have the money to make that lump sum payment.
He says consider all options. If you've been thinking of refinancing, now could be the time to do that. Rates are still at historic lows. Or if you're facing a permanent reduction in income, talk to your lender about a permanent loan modification, but be prepared to show proof.
You're going to have to essentially give up all the financial information that you gave when you originally got the mortgage, paycheck stubs and tax statements and all that stuff.
One thing Holden says you shouldn't do, take out an equity loan against your home to pay the mortgage. He says it's short-term, risky, and when you pay it back many times, it may have more interest. So what are your challenges? Email us, rebound@abc15.com. For the Rebound Arizona, I'm Joe Ducey. If you've got a problem, let me know.